Hi, I'm Jimmy. In this video, we're looking at what are tariffs and do they actually work? So the first half of the video is going to look at what tariffs are. Second half of the video is going to be how do they actually play out? Trump was president once before, and then tariffs were initiated, so we can use actual real life examples to see how things actually played out. Okay, so what is a tariff? Well, a tariff, if you have two countries, you have country A and country B, and let's say country A is going to initiate a 20% tariff on all goods coming in from country B. Well, essentially, what this is an importer tax. So if you got a company, let's say a company like Ford, Ford's a US company, and Ford has to now pay a 20% importer tax, which is exactly what a tariff is. It's a tax on importers. So Ford, being the importer, has to pay 20% on whatever their product is. Maybe it's a wheel, maybe it's some part of their car in general. Well, when that product gets shipped to the US and Ford buys it, Ford, let's imagine that that product costs $10 per piece. Well, Ford's going to have to pay an additional 20%. So in this case, $2. $2 will go to the government, $10 will go to whatever company over in country B that manufactured that product. So they pay the $10 there, the other $2 goes to the US government. So where does this leave us? Well, in the case of Ford, this would leave us with about 20% higher costs. Clearly, this is a bad sign. Well, this is why they might say, you might hear people say that there's going to be higher inflation because of tariffs. This is why. If Ford has to pay 20% more for different car parts, well, they're likely to pass on that cost over to the consumer. The idea of it, though, the concept behind why you might initiate a tariff is to try to get the company. You might want Ford, don't buy those products over in country B. We want you to buy those we want you to buy those American products. The real issue here is when there's a tariff on a country in general, and we saw this with Trump's first presidency. Most of the tariffs were started in 2018, and we saw this actually happen. And that is, well, country C decides to turn around and step in. So country C steps in, and now country B says, all right, well, we'll ship the product to country C. And then from country C, we'll ship on over to country A. We never pay the tariffs. But unfortunately, what happens there is there's added shipping costs. So the cost to the US consumer ends up going up anyways, and we don't get the benefits of actually using less imports. That's the real issue with doing a tariff on an individual country. Okay, now another possible reaction here is that country B initiates their own tariffs and they say, you know what, we're going to have our own tax on your exporters, our importers. So if anybody buys any American products, well, we're going to tax those, maybe at the same rate, maybe at a different rate. Well, essentially, if Ford were selling their cars in China or in another country that would have tariffs, to illustrate that, let's jump over to the Investors Grow website where we can see the actual revenue breakdown for Ford's fiscal year 2023 revenue. And we can see that there's talk right now of tariffs on Canada and Mexico. Well, 10% of Ford's revenue is generated in Canada and Mexico. If Canada and Mexico were to say, well, we are going to impose our own tariffs on the products that America makes and ships over, well, now Ford's revenue, not only is Ford's revenue potentially under fire, so this 10% of the revenue is going to be pressure on that, because just like that, if it was a 20% tariff, their cars could, in theory, be 20% more expensive to, let's say, Canadians. Well, so now there's pressure there, but also they paid additional money for their individual products when they were building their cars, so products that they imported. So now their cars cost more and revenue, there's pressure on revenue. Now, Ford might be a bad example because, you know, they're not exactly the most profitable company out there. But what about a company like Apple? Again, on the Investors Grow website, we have Apple's revenue, fiscal year 2024. They've already completed fiscal year 2024. And we can see that the green section of the chart here, this is their revenue from China. They generated nearly 20% of their revenue from China. Now, a lot of their products are in fact manufactured, a lot of Apple products are in fact manufactured outside of the United States, a lot of it in China. So now their products are going to be more expensive to make with the tariffs. And there's, assuming China does retaliatory tariffs, and they did the last time, Well, if that's the case, that could hurt a company like Apple. And again, the US consumer could kind of get banged up for that because the new iPhone is going to be even more expensive because the costs have gone up on a company like Apple. Now this leads us to the question, does this actually work? Do tariffs actually work? Well, this is a chart put out by the US Census Bureau, and this is the amount of imports in dollars on on Chinese products, how much the dollar amount being imported. And we can see that this highlighted here, this highlighted area is Trump's first presidency. And if you look at the broader picture of the trend, it looks like it was kind of trending higher. And then when Trump took over, it does kind of look outside of COVID, the crazy drop with COVID, that's a little bit different. But it does kind of look like tariffs kind of tailed off a bit. I mean, not tariffs, imports from China kind of tailed off a bit. So perhaps there is some evidence that this worked. But this brings us to the issue of just shipping around. You could still have China make it and just ship it over to India and then ship it to the US or ship it to Indonesia and then the US, whatever it ends up being. But for that, we can actually see the US trade balance. So this is imports minus exports. A negative number, the more negative the number is, the more imports we have over exports. So that's a bad thing. Negative is bad. Let's just look at it that way. Now, again, this entire highlighted area is Trump's first presidency. And if we were to focus in on when they actually initiated tariffs started in 2018. Well, tariffs, this is 2018 going forward. Now, again, COVID made things a little bit unusual, but we can see that things got real nuts for a little while. I mean, during Trump's presidency, tariffs didn't exactly slow the number of imports. Or if it did, what this chart tells us is that it hurt exports more than it helped imports. More than it hurt imports. Yeah, you know what I mean. That imports minus exports, it got worse. Negative number is bad here. So whether or not tariffs are actually helpful, it seems like they're not, especially if you're targeting individual countries, because it doesn't exactly take a genius to skip around targeting those individual countries. Now, with that being said, if you'd like to get access to the Investors Grow website, where we try to make it simple and easy to research companies, value companies, there's a link right here, a link in the description below. And if you're curious how to research stocks, I did a video called 8 Steps to Analyze a Stock. Link right here, link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.